Today's episode is brought to you by Mazars.
Sound Cartel.
From Sound Cartel, I'm Nicole Goodman, and this is Business Essentials Daily. For many years now, businesses could purchase assets and claim full deductions for them, enabling them to do things like investing back into the business. These concessions are proposed to end from the 1st of July 2023. It's important that taxpayers are aware of these potential changes so that any tax deductions aren't missed. Joel Orbita, Associate Director at Mazars, explains to Chris Ashmore why it's important businesses are on top of these ever-changing rules.
Over the past few years, the depreciation rules for eligible businesses has changed significantly. As these businesses look to prepare their tax returns for the recently completed 30 June 2023 financial year, it's important to consider the difference between the temporary full expensing measures available for that financial year and the proposed changes that are expected to come into effect from 1 July 2023.
Well, Joel, what can businesses claim in the 2022-23 financial year?
Eligible businesses have been able to claim an immediate deduction under the temporary full expensing measures for the business portion of the cost of eligible assets and improvements.
What is an eligible business?
So an eligible business is one that firstly conducts a business. So it can be a sole trader, a partnership, a trust or a company, and has aggregated turnover of less than $5 billion for new asset purchases or $50 million for second-hand asset purchases. But companies with turnover greater than the threshold can still be eligible to claim under an alternative income test.
What do they need to do to claim the deduction?
So there's a couple of criteria that must be met in terms of claiming the deduction. And to do that, the asset must be a depreciating asset and purchased under the following. So the depreciating asset must first be held on or after 7:30 p.m. Australian Eastern Daylight Standard Time on the 6th of October 2020. The depreciating asset is first used or installed and ready for use between 7:30 p.m. Australian Eastern Daylight Savings Time on 6 October 2020 and 30 June 2023. The asset is not an excluded asset. So by that we mean assets that are allocated to a low-value pool or a software development pool, certain primary production assets, building and other capital works deductible assets under Division 43, or assets that will never be located in Australia or used in Australia for business use.
There's very specific times there. You
They
want
are.
to make sure your watch is working properly. Now, does that mean businesses can claim a full deduction for those assets?
Most businesses will be able to claim a full deduction for the depreciable assets purchased. However, there is the ability to opt out on an asset-by-asset basis where the simplified depreciation rules are not being used. There are a few times where this option should be considered, and some of these circumstances are where, for example, a trust has franking credits attached to its distributions to the beneficiaries. So what happens is that a trust in a loss position that's created, for example, by the temporary full expensing of the assets cannot make a distribution. Secondly, where a company would like to have greater flexibility in paying out franked dividends, you may want to then consider not claiming assets under the temporary full expensing measures in full. Or where a business is preparing for a significant business transaction, such as a sale, and can't use the losses in the future.
I understand for the current financial year, that is from July 1, 2023 to June 30, 2024, there are new rules to all this.
Not necessarily new rules, but more of a reversion to what the old rules were, in that the temporary full expensing measures have changed and been removed. So small businesses with an aggregated turnover of less than $10 million and using the simplified depreciation rules can write off assets costing less than $1,000 where the asset is first used, already installed for use by 30 June 2024. Assets costing more than $1,000 will need to be pooled and depreciated accordingly. But there is a temporary threshold of $20,000 that has been proposed for the 2024 income year, and that was proposed in the May 2023 budget to be applied on a per asset basis. However, this announcement is not yet law. In addition, the lockout laws that previously prevented a small business from applying simplified depreciation rules after previously exiting the system are also proposed to be suspended until 30 June 2024.
For those businesses that don't qualify as a small business, what happens?
So for other businesses that don't qualify as a small business, or for small businesses not using the simplified depreciation rules, assets costing less than $100 can be written off in full. This should not be confused with a $300 threshold that applies to non-business entities, such as employee individuals.
Well, we've covered a lot with all of this, Joel. Did you have any final thoughts on the changes?
Yeah, so with the temporary full expensing provisions ending on 30 June 2023, the rules on claiming depreciation have changed significantly. Business taxpayers should be aware of potential larger tax payable amounts or reduced refunds as a result of depreciation deductions being reduced. However, it's expected that the increased instant asset write-off threshold for small businesses using the simplified depreciation rules will become law, helping to manage these potential changes. Also, I just want to add that depreciation is a timing thing, so you might have been able to claim deductions in full in the past, whereas now they'll be spread over a number of years. In the end, it is a timing thing, so you'll be able to enjoy the full depreciation of your depreciable assets over time.
That was Joel Orbita, Associate Director at Mazars, Australia. This episode of Business Essentials Daily is produced by the team at Sound Cartel. Thanks for listening. I'm Nicole Goodman. We'll bring you more Be Daily tomorrow. Follow at BE Daily Podcast across social media and head to bedaily.com.au for more from the Business Essentials Daily podcast.
Sound Cartel.
This episode was brought to you by Mazars. To find out more, visit mazars.com.au. That's mazars.com.au.